We had an ugly week, and it ended our hopes of a quick new all-time highs for S&P 500, as S&P 500 pulled back and landed on first support. However, high-yield bonds hit an all-time high, so that gives me good reason to believe that we will try for new records pretty soon. NASDAQ and especially Magnificent 7 are big losers this week. In Forex news, dollar is attempting to bottom, and this is weighing on various commodities, namely silver, copper, and crude oil, especially as it broke down towards good support area, which I will explain. And we will finish up with Solana, Ethereum, and Bitcoin analysis as they break down. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, September 6, 2024. You can see I'm already recording it on September 7th. Don't forget to hit the like button, subscribe to this channel, share this video, ask any questions you like. If you're a subscriber, stay tuned. I will cover market breadth, treasury bonds, various ETFs, large cap stocks, speculative securities, and some gold related in the members only recap. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart, this green, blue, red, and yellow line. They're available for trading view, and you can sign up on my site by following the link in the show note captions. We're currently looking at S&P 500 on a daily chart. Okay, don't freak out. Daily just means each day's of activity is represented by this funny looking red or green, we call them candlesticks. If a candlestick is red, that means the price went down. If it's green, it went up. So looking at this chart, notice my lines and notice what happened this week. We landed exactly on this green support resistance line, so I call this first support. It's okay, it's not like very strong support. Notice that before, back in July and early August, we kind of right there on the 25th of July, we landed on it, bounced, but didn't get to the new highs, and then we broke below it. Now, on the 5th of August, we got very close to this blue support resistance line. And I was saying that ideally we should touch that line, because at that point we will be quote-unquote oversold, as in, for example, happened back in October of last year. Notice that we touched this blue support resistance line. In fact, we broke below it and then we closed above it. This is a safe place to buy, in my opinion. Safe in the sense of relatively low risk and a good opportunity, in a sense of most likely there will not be any further price movement to the downside. Indeed, I was correct. I bought myself here. Right now I don't have a S&P position, but I will open it when or if we get to this blue support resistance line. So let's see what happens at this point. Basically, we will be watching for either continuation of a movement to the downside, and we will be watching this lows from August 5th, and by extension very close to that low. Those lows is the blue support resistance line. So we're looking at around 5,000 for S&P 500 points. That's another 4%, 5% or so to the downside. At that point, S&P 500 will become oversold rather, and it will become attractive. Right now it's not terribly attractive, and when it was at new records it was not at all attractive to buy. It was attractive to sell, but the problem with shorting is that you don't know where the top is. Like I kept saying that, we kept making new records throughout this year basically, and if you thought that this was the top back in February, then you were completely wrong. Even if you thought that this was the top back in June, you were also wrong. Somehow, if you caught this top on the 16th of July, congratulations. But in an uptrend, in a bull market, it's extremely difficult to find the top. So we don't try to do that. We try to look for opportunity to buy on a pullback. Buy the dip. It's pretty straightforward. So we're waiting for the dip to complete itself. And at this point, I feel like it's not yet complete. I mean, it's possible, once again, that we will bottom here and just make new records. For my taste, I like to see a more oversold condition where there is less chance of me sitting in the position for a long time and waiting for it to make new records. I would rather buy on a deeper pullback than wait. I would rather buy on a deeper pullback than sit in the position and wait for my equity to come back to where I wanted it to be, above my buy price. So right now we're waiting, and we're going to see where this next few weeks, few days to few weeks will take us. September in general is a relatively weak month for stocks. So we will, it's called seasonality, and according to seasonality, September is usually relatively weak for stocks. So we will see if this year will be any different. I don't really normally trade on seasonality, but it's good to keep in the back of your, on the back burner, so to speak. On the contrary, high yield bonds, J&K, made a new record on Friday. So notice how high junk went. It's at record highs, all-time highs. So I look at high yield bonds because I think it's important to know what high yield bonds are doing, because high yield bonds, junk debt, correlate highly to the S&P 500. This is a correlation coefficient here below. This is high yield bonds, a weekly chart. Each candlestick meaning 1 week worth of activity. And notice that the correlation is very high. So we will be, when I see high yield bonds diverge in such a bullish manner, it gives me a better feeling about what stocks are going to be doing. So if junk debt is making such strong performance, stocks should follow junk. The opposite is also possible. Junk debt could turn around and continue lower, but I have a more belief, I trust high yield bonds more than the stocks. It's my hunch maybe, but by and large the correlations are very high. So basically the bull market for stocks, I don't think it's broken. For stocks, for the bull market for stocks to be broken, the stocks need to collapse. They need to get down to this yellow support resistance line, which is around 20% down at around 4,300. This is going to take a long time. I don't think it just collapses like that. Of course, if there's a World War III declared, most likely stocks will collapse. But at the same time, if there is World War III, then the stock market will close. They're just not gonna trade. This happened before. This happened during World War I, during World War II. So for now, I wouldn't necessarily get ahead of myself, get ahead of your own thinking. Let's just look at the chart and see what's happening on the chart. And the chart is saying that we're slightly oversold. Okay, there is no immediate danger of a collapse yet, especially with the, like I just said, high yield bonds at all-time highs. There is a good chance that stocks will just bounce here and continue higher. So here is NASDAQ QQQ. So I drew in this line on August 21st, and it actually exactly followed it. I just sometimes I freak myself out. This line to the downside, that it'll roll over, and it indeed rolled over. How did I know? I was looking at this rising wedge. So rising wedge that began on the 5th of August. So notice that NASDAQ actually did break below the blue support resistance line. So technically speaking, this is a signal. This was a signal on the 8th of August to buy, and you would have been correct, and you would have made a little bit of money here. Now you would have been already stopped out by now, because if your target is at the green support resistance line, then you need to, move your stop to entry, and at this point, yesterday on the 6th of September, you would have been stopped out. So once again, we're now approaching this blue support resistance line, and we will see again what happens. Right now, NASDAQ is the weakest link. So here is a magnificent 7 with Tesla, Apple, and Google as being the biggest share of this ETF, ticker symbol MAGS, MAGS. Big red candlestick, big, we call it bearish engulfing pattern. So bearish engulfing pattern is this right here, this 2 candlesticks, one from Thursday, September 5th, and one from Friday, September 6th. So this red candlestick fully engulfs the real body, this green part of the previous candlestick. This ETF is relatively young, so you can see that my indicator lines are not yet painted, because I need 250 days to make a decision, and it has only been since November has been trading. So several of these stocks, like Tesla, for example, also had very big negative candlesticks. Here's a big, same red candlestick engulfing previous green candlestick. So this clear bearish engulfing pattern. Let me see what else is there. The Apple, Alphabet, Microsoft, Nvidia, of course, Nvidia. There's Nvidia, the darling of our recent stock market rally. Nvidia is oversold. You can see that we got down to this blue line. Previous time it got down to the blue line was in August, and if you bought it there, you would have made a little bit of money, but now again we're at the same level. So is the run for Nvidia over? It's possible. Ideally, you should have bought when original breakout occurred, which was back in February of 2023. Notice I didn't really need to think of anything. I just looked at the chart, and there's that breakout. Actually, even a little bit earlier, in February of 2023. So if you bought it back at $22, now it's like $220, I believe. Gigantic run, really. I mean, it was as high as, it was 138. It's currently 100. So it's a gigantic run. Especially if you bought options, you would have been basically set for life. Do we want to buy now? That's a good question. Technically speaking, yes, we are seeing a signal. However, just looking at this overall market QQQ, I think we still have a pullback to do. I think we will touch this blue support resistance line for NASDAQ. I mean, it's only like a few percentage points, not even 2% away. So we will most likely see further pullback, at which point most likely we will see some sort of a bottom in action. Now, where that bottom in action will take place is no way to tell. And if somebody tells you that they know the future, well, I also have a bridge to sell. So for now, I will wait and see what happens. Most importantly, I'm looking at S&P 500. It's this candlestick, this red candlestick, is very bearish. So short term, it's definitely oversold. Long term, I think we might still see further pullback. Maybe we'll see like a small bounce here and then another leg down. Ideally, once again, we will get to the blue support resistance line, something similar to what we had back in October, at which point we will have a much less risky opportunity to buy. Okay, so let's switch gears. We're currently looking at dollar currency index. So dollar currency index is important if you trade commodities. Dollar currency index ticker symbol is DXY. Currently, dollar has turned around and now in a downtrend, which began right there on the 5th of August. And you can see if you shorted the dollar around my red support resistance line, you would have been correct. Right now, we're seeing a bounce, and I don't think this bounce is done. Looks like this was a hammer candlestick today, rather yesterday on 6th of September on Friday. I think we might still continue higher from here. However, the point is that dollar is currently in a downtrend. So if we continue higher towards this red support resistance line, then most likely we will see another opportunity to sell it short. So why do I care about dollar? Is that because we trade things like gold and silver, and notice that the way gold is expressed is XAU USD, gold divided by US dollar. So if US dollar is getting bigger all of a sudden, it's getting bigger. Okay, so it will pull this currency pair lower. Okay, the lower part of this equation got bigger, it will just kind of like sink this. So I think I'm expecting gold to pull back. Silver is already there. Silver has actually started pull back a little bit earlier. Now silver, technically speaking, is a industrial it's more of an industrial metal than a precious metal. It is definitely a precious metal, but silver is used in things like mirrors. So definitely an industrial metal, and perhaps we're seeing industrial activity reduced. So perhaps we're seeing less demand for silver as a result. So notice that silver is already at this blue support resistance line, and I mean, technically speaking, again, we should be buying here. But if I am correct about the dollar, and we will pull back higher for dollar, if the dollar continues higher, then silver for sure will come under pressure, and so will gold. So for now, I want to wait and see with gold related things like gold miners and silver miners, and see where we go from here. Copper is also under pressure. Copper is an industrial metal. Now, relationship between copper and the relationship between copper and the S&P 500 is not as clear-cut as, for example, between high-yield bonds. So notice for high-yield bonds, the correlation is very high. You notice this yellow indicator is mostly positive. However, for copper, that relationship is not nearly as clear-cut. We're seeing, I'm going to do copper futures, excuse me, HG1 exclamation point. So here is copper futures, and sometimes copper is doing the same thing. Sometimes copper is doing the same thing as S&P 500, where notice that it was positive correlation. Sometimes it's doing something opposite. Sometimes it's negative. Many times it's doing positive correlation. So I think many people think about copper as Dr. Copper as an indicator of health of stock market. It does make sense because copper is used as an industrial metal, for example, in buildings. So copper, getting lower in prices, depreciating in value would imply less industrial, less building activity. That's the fundamental thinking at the very least. As far as technical thinking, I am again less certain that that copper and S&P 500 are strongly correlated. I don't think they're that strongly correlated. In fact, right now there's negative correlation. So it's difficult to draw conclusions from price action of copper. What will stocks do? Having said that, if you are able to trade copper, we're seeing short signals. We're seeing signals to sell copper short. You know, if you have opportunity to trade copper, in the United States, we're not able to trade copper like easily. But if you have what's called, if you have access to what's called CFDs or contract for difference on copper, you could potentially try and sell it short. I think it could easily drop like another 6 to 10% or so towards the yellow line, potentially lower. We just don't know how low it will go. So once again, is that because of the reduction in industrial activity? Is it anticipation of something bad? No way to tell that. That's a fundamental analysis, and if you read some of those fundamental analysts, they're about 50% right. So go figure. So there's copper. We got gold, silver, copper, and now I'm going to look at oil, crude oil, which is also breaking down. Actually, in fact, it broke down. Technically speaking, the beginning of a downtrend for oil started in May of this year when we saw a break below this red support resistance line. Big rally, another several opportunities to sell short, the latest one being on August 14th. And now when I have a nice move down, and we broke below this yellow line with a vengeance and continued lower. So we're currently around $67 for copper. So what does that mean in the grand scheme of things? Now, there was a floor, and I highlighted this floor for pricing for crude oil with this orange square, orange rectangle. So this is going back to like 2023. Even earlier, there was a low rather from December 2021 here. So we're looking at the price floor for oil somewhere between $63 and $71. Currently we're at $67 and we're right smack in the middle of it, basically. Now this breakdown somehow feels somewhat different. Notice that this breakdown that started back from 2023, it was the end of a big move down that started from the tops in June of 2022 and continued into March 2023, and it sort of ended there, and we bottomed and we made a rally. This breakdown that we're witnessing right now, it's almost like a beginning of a breakdown. We barely, we moved from 84 to, current $68. So this breakdown feels somewhat different, and this, to me, seems like we may not hold these lows at around $61, $63, and I think we might actually break below them into the upper 50s, possibly lower. Once again, what does that mean for economy, for stocks? Here's the correlation coefficient down below here for crude oil versus S&P 500. You tell me, does this feel like a high degree of correlation? Certain periods, like for example right there between 2008 to 2013, highly correlated. But the rest of them they're even worse correlated than copper. Here's copper. Copper has a little bit of a better correlation, I think, to S&P 500 than crude oil. So is the breakdown in crude oil prices a precursor for a breakdown for stocks? I just don't see it. It's all over the place. What if the reason why we are breaking down for oil is because we're on the verge of developing some sort of a new energy source? What if all of a sudden we have very high fuel economy cars because of that new technology? That's one way of looking at it. Another way of looking, of course, is what if the breakdown in oil prices is a precursor of a recession? And that's a very obvious kind of answer, and I'm not 100% that we're about to have a recession. There still seems to be, very strong, robust demand for goods and services. Yes, stocks did pull back, but stocks pull back all the time, and then they recover. So this is a weekly chart of stocks. Yeah, we pulled back a little bit. We're again exactly at the first support, at the green line. So the breakdown for all of those commodities may not be such a big deal. They may be related to supply and demand, may not be related to possibility of recession. Once again, we'll see where this leads us. Finally, I want to talk about cryptocurrencies. Last week I mentioned that if we see a breakdown for this Solana thing, I don't know where they come from, how they come up with this stuff, but there's the breakdown. I see it on my chart. I tried to trade it. I don't have an option to trade it in my Robinhood account, but we're seeing the breakdown. I saw this. There's the breakdown that occurred here on the 6th of September. Technically speaking, it actually broke down on the 3rd of September, but there's a clear close below the red line. So now we're watching it very closely to see if there's going to be a follow through, but the signal is there. So Solana did break down. We have looked at Ethereum, which has already broken down as early as early August of this year, and now has closed on Friday, yesterday, at the lowest level since at 52-week lows, basically. So we have Ethereum and Solana breaking down. There's a billion other cryptocurrencies which I don't really care about, but this one for some reason is important. Ethereum, Solana, and of course Bitcoin. Here's Bitcoin. Up till very recently I was very bullish. We were buying it. Notice this upward facing arrows. I was buying it. We had great run that started back in February of 2023. How did I know? I didn't. I only looked at my chart. There was a breakout right there on 15th of February 2023. That's all I really needed to know. Before this, Bitcoin was below this yellow line, below the red line. On 15th of February 2023, it broke out. Okay, what happened on that day? Can you remember? I can't. 15th of February 2023, that's over a year and a half ago. I can't, but I can see on the chart it broke out. That's really all I needed to know. We started buying it. We were very successful once again. But now something is different. Okay, there's a signal on 8th of August. There's another good signal on the 23rd of August. How do I know it's a signal? It's simply closed above my blue support resistance line. You can find out more about those lines by looking in the description. But unfortunately, following this 23rd of August signal, there was not really a follow through to the upside. The rally really petered out. Not even we haven't even gotten to this green support resistance line, much less to new records. And then we rolled over right there on the 27th of August, back below the blue line, attempted to rally on the 29th of August, right there, and failed. And now we failed badly. We're approaching the lows that were set on August 5th. This candlestick, I already analyzed it last week. It's not a very good looking candlestick from August 5th. It's a big red candlestick with a giant tail at the bottom, so it's not a hammer. It's not a bullish hammer candlestick. So bullish hammer candlestick would have the opposite. It would have the green candlestick. This is not it. So I think we're seeing we're going to be seeing a retest of this August 5th lows. If we're going to see the retest of those August 5th lows, that means we're going to be breaking below this red support resistance lines. And by extension, it would imply a bear market for Bitcoin. So let me show you what a bear market for Bitcoin looks like. Okay. There it is. So there's the breakdown below the red line on 5th of January 2022. Okay, this was a while back. This is a daily chart once again. Each day, each candlestick is a day's worth of activity. Breakdown. Continuous opportunities to sell short at the red support resistance line. Lower lows, lower highs. Lower lows, lower highs, until we see the opposite. We see a breakout that I just described in February of 2023. So what I'm trying to say is, if we see a retest of this August 5th lows, by extension, it would imply a bear market for Bitcoin. All right. So I have no digital assets right now. I have no Bitcoin. I have no other cryptocurrencies because I'm afraid we're about to, continue lower. There is now inverse ETFs available to trade Bitcoin. Of course, if you have a trading account for cryptos, you can also just outright short it. But now we have inverse ETFs. We also have call and put options on those ETFs. And if we have a put option, we are going to express our bearish bias on Bitcoin. Now, where is that line? Where is that level? That level is the red line. I'm going to read it off the chart. 51,751. Okay, so if we break below that level and close below that level, ideally on Friday or on a weekly basis, or for this security, I think it's going to have to be a Sunday. The week for Bitcoin is weird. But in any case, even on daily chart, if we break below 51,751, again, I'm reading right off the chart, I think we will see a bear market for Bitcoin. So right now I turned on a projection of indicators into the future, and they do line up, which is good. So notice that the future indicators do line up. So notice the way they're curving up into October, into late October. What this tells me is that the bearish levels are coming closer to the price action. In fact, current price action is already in the bear market, because if we project into the future, the bear market is already at 58,000, but we are currently at 54,000. So we're, technically speaking, if we were already, like, let's say in October of this year, we would already be in a bear market for Bitcoin. So what I'm seeing is most likely we will break down, maybe make a lower low towards the yellow line, trade around, and then possibly bounce into October. But then again, at that point, we want to be thinking about selling it short if we get there. It could just collapse also. There's no way to tell that. So this is my dire warning for cryptocurrencies. I am out of all cryptos as of right now. I have no problem re-entering cryptos if we turn around and close above 60,585. Right now I'm reading it right off the chart once again. And you can have the same lines on your chart. So simply go to MasterChartsTrading.com. So this is the end of the presentation. The rest I'll just explain how to get my lines and how to sign up. If you watched all the way, please like the video, sign up for my site, on my site, to get the indicators and to get my newsletters. So sign up by going to MasterChartsTrading.com. So the trading indicators are $24.95 per month if you buy yearly subscription, $29.95 per month if you buy the monthly subscription. They all come with free 7-day trial. If you want the newsletter, I send out daily alerts and weekly members only videos. So for example, this week we'll cover market breadth, treasury bonds, ETFs, large cap stocks, speculative securities, as well as gold related ones. So that's newsletters that you can sign up for. I send out again daily alerts, and the best thing, of course, to get this both indicators and newsletters together. $14.95 per month if you get the yearly subscription, or $15.95 per month if you get a monthly subscription. It's $49.95 per month. That's a yearly equivalent. You need to pay up front for the year. Let me know if you have any questions. Make a comment, like the video, share this video. If you have any questions, let me know. Thank you for watching, and have another great trading week. Bye bye.